Hi, I'm Ted Seides from Capital Allocators, and I am panicked about my teenage children.
Yo, yo!
Yo, yo, Mr. Howitzer.
K-Nut.
That's me.
We've had a month of rain here.
Yeah, what's up with that?
Does it bother you? I just kind of am ready to get I mean, we've never had a winter here in Phoenix.
You just lather up and go outside and take a shower out there.
Yeah, it's like the fjords. I'm getting ready already for spring. Got the Super Bowl, Phoenix Open. We've got, well, that's it. There's nothing else going on in Phoenix.
Are you biking these days?
I'm biking a lot. I'm doing with the boys. We got one coming up south of France. And I've been doing a couple hard rides. And I've been working out with a trainer. I don't have a great schedule, but this trainer's kicking my ass. We're working on, it's not so much cardio. It's all bands and sit-ups, and it's like really weird. No weights. It's just really about balance and core strength. So that's my weakest. I'm weak everywhere, but that is my weakest.
All right.
So I have a really fun guest today, and fun if you're a geek and like money and capital and podcasts and talking about hedge funds and capital allocation. So my friend Ted Seides is the founder of Capital Allocators, an ecosystem that includes a podcast, events, education, advisory services. I was introduced to Ted 4 or 5 years ago by Jan Von Eck, who we've had on the podcast. And he said, you got to listen to Ted's podcast. He helps, one of the things he's done over the years, he worked as a founder of Protégé Partners and began his career at Yale University Investment Office. So he knows his way around my world and advises a lot of people, funds like ourselves, but more in the hedge fund space, how to go about raising capital, presenting themselves. BA from Yale University. He would have told us. Anybody that goes to Yale mentions that usually in the first 30 seconds. So now we've saved him the embarrassment. And an MBA from Harvard Business School. So how smart could they be? He agreed to come on my podcast.
Why does he want to talk to us?
We got Ethan on the side. So we have 3 ASU people in here. I know.
He's going to hang up real soon now.
Yeah. Well, he doesn't know that we're talking about him yet.
No, but he'll know.
So one of the most popular podcasts around investing in capital, 10 million downloads. What else can I say about him? He has no agenda because he has his own podcast and he talks about the world that he lives in. What catches my eye always about Ted, I checked in with him recently just to talk about fraud because he, with the FTX stuff, he was around in the days of Bernie Madoff allocating and he has a really different take on how managers should think about this, the VC industry, hedge fund industry, with respect to fraud. So I wanted him to come on and talk a different take. And then obviously the SEC now, randomly over the last few days, is now talking about the ability to, that LPs can sue venture capitalists for bad investing. So I want to I'm sure it'll be a different,
great.
So Canute,
awesome.
Call your lawyer.
Yeah.
So anyways, let's get Ted, and he's panicked. I saw that he's panicked about, which he should be. He has twin 17-year-olds. I don't even know. He may not even be here. People are probably just running around his house playing practical jokes on him. And so he's got 3 kids, 2 twins. My wife's a twin. So we've talked about that. But anyways, let's get him on and talk about the markets. Ted.
Hello, Howard.
What's going on? How's the eye?
Oh, everything's fine.
Okay.
I will say that usually when you do something like this, people give you these incredibly flattering intros, and then you come on.
Well, you wrote it. I'm just reading what you wrote.
Yeah, but I know you, Howard. I have a feeling that whatever you may have said before I came on the show isn't quite as flattering as what other people, and I appreciate that.
So what is it that makes a young white man want to go to Harvard and Yale? What kind of upbringing creates that person?
Rote learning. Like, you're on a track, you're on someone else's path, and that's where it takes you. Better that than drugs and alcohol, but it works,
Listen, I had Trunk Fan on. I don't know who's going to air first, but he doing pretty well, and he was a blackout drunk, he said, in college. He went to McGill, and then now Elon Musk talks to him on Twitter, and we can't get Elon to talk to us.
Yeah. Well, I think that for the most part, because I've had this conversation with my kids and others, for the most part, the probability distribution of outcomes of flat out drunks is sort of takes a different trajectory than the probability distribution of outcomes of some other educational institutions that are more well known. So not to say that the drunk can't become a superstar or that people I went to school with can't become complete jokers, and some of them have. We can talk about it.
I've backed a few out of Harvard. So with your kids, so you went to Harvard and Yale, what's the pressure on your kids? How do they top that?
Zero, like none. I have 3 kids. I have twin boy-girl, 17-year-olds and a 13-year-old boy. I didn't like the pressure that I felt when I was a kid, and I never put it on them. And my older son is not, just say academics aren't his thing. So that was never a chance. My daughter's very, very sharp, but she has no interest. She's smart. She wants to go somewhere warm, somewhere fun, and she has no interest. And I don't, Yale isn't the place it was when I was there, so I'm not sure I would want to go there if I could today. So there you go.
And so the path back then, because you are 50, 49?
Yeah, 52.
Okay, so I'm 57. So when I was in Toronto growing up, we've talked about this here, there was no internet, and Jewish family, upper middle class, you were lawyer, doctor, accountant. Your friends were all on the same path, public or private school. But today, there is no path other than, don't let your kids become blackout drunks, but there really is no path. And there's also some pretty good schools of thought, both on the 10,000 hours and being a generalist. And as someone who reads and writes a lot and talks to a lot of smart people, do you have any thoughts on that?
I don't, but I think you're right. I think that the aperture of opportunity is a lot wider than it was, but it also means that it can be a little bit harder to navigate. Like 17, yes, there are some brilliant 17-year-olds who are so smart and so interested that they've found your podcast and mine. Mm-hmm. But for the most part, I don't know. I look at through the lens of my kids. They don't know what they want to do, and they shouldn't. They're 17.
Yeah, I have Ethan, who's 22. He's kind of taken a half year. He's ahead. He was sitting here, and he was curated by just reading he liked my blog enough that he reached out in such a smart way. I'm going, he's already who cares what school he went to? If he understands what's going on this blog, then they're already way ahead of the curve. Is that something that you would say about someone who gets what you're doing?
I think someone who's engaged at that age in any discipline, it doesn't matter if it's what you're talking about or I'm talking about or something else, they're able to find their own passion. That's the best path.
It really is, huh? For my son, it was golf. And, because we pushed so hard on school, it took longer for that to emerge, right? But he still found it on his own, just on the internet and figuring out collab and degrees. So he's in the PGA program at UNLV. So that's self-found. Took maybe an extra 5 years, because maybe if he was 18 and knew that existed, he wouldn't have wasted 2 years, So I think it is true. When they find it themselves, it's just so much easier.
Yeah. And who knows where it goes, right? Golf could turn into statistics. It could turn into business. Correct. It could turn to, who knows?
Like you said, golf isn't just about being a pro golfer or working in a pro shop. It's the PGA is like the NFL at this point. Now with Live, basically PGA is proven to be breakable. They're not the NFL. So when USFL, I was just talking about today, when USFL broke off from NFL, it didn't work. So the NFL became stronger. And now that Live has broken off and actually gotten stronger, it's over for the PGA. So golf is actually, it's like kind of Jurassic Park. Golf is not going to be the same, right? Yeah. You can't put it back in the box.
Yeah. Yeah. I think if you circle back, if you look at the path you took or the path that I took, I would advise, meaning the stuff that you did to get to where you've done followed your interest, right? It's like comedy and then media and then investing and then tech. It's just following your interest. And my path was get good grades, go to the best school you can, go get a job that looks good and can make money. And eventually you find your way within that. But if I were doing it again, I would follow your path. I'd find something you're really interested in. It doesn't have to be your deep life's mission, passion, something you're really interested in, and then just pull the thread and see where it goes.
That's a really good point, because I agree. But when I was Up until I wasn't good in school, I was great in school because there was a path, and we all had the same friend group, and we all studied together, and we all put that pressure on ourselves. But then college happened, and certain people broke away, as some of my friends just know they wanted to be in law, and I just looked at the textbooks and said, and that's kind of what happened. So really, I wasted a lot of time going down that path. So I was doing stand-up comedy, but there was no way in my mind I was going to bring that up to my parents. So I did both. I got the grades. It's really an interesting point in time. And like you said, I think that the young people suffer because of this endless opportunity, because they can go in any direction, which probably hampers them in some way because there's too many directions.
Yeah. So there you have it. I'm panicked. I've got 17-year-olds. Who knows what they're going to do?
You're in the heat of it. So with respect to your business, how did you know to break off? Like, what was the point where you said, I'm going on my own and going down the media road? What was it for you?
It was purely serendipity and accident to some extent. So I, as you know, I had been involved in the kind of institutional fund side and hedge funds, investing in hedge funds for a long time. And the business that I was running with the partner I started with in 2015, it was just time to move on for me. And that was a combination of internal issues and external issues. Most partnerships have internal issues. The external environment was harder for hedge funds. I didn't really believe in what we were doing as much. The problem with it is that over 20 plus years, the skill set I had built up was investing in managers. And that skill set, for a variety of reasons, was sort of out of favor when I left. So it wasn't the case. I was ready to build my own asset management business and do what I knew how to do. But I also knew, putting on any kind of commercial lens, that there wasn't a business to be had there anymore, particularly in the hedge fund side. So I didn't know what to do. And I stepped away, and I had a bunch of people approach me about, hey, would you want to do this? And I was like, no, that doesn't sound good. No, that's and one of my friends said, don't say no, just say yes and date them before you get married. So that turned into a consulting type stuff. And one of the things along the way was I got asked to go on a couple podcasts. I had written a book about startup hedge funds, and I didn't really want to spend time with that world, but I was on a couple podcasts, and it just demystified it. Like, I just felt like, hey, we're just two people talking on a microphone. And one day I woke up and said, maybe I'll go talk to my old friends, so I won't be hedge fund guy anymore. I can go be investment guy again. Not thinking anything of it other than I was going crazy because I had too much time on my hands. And then it just kept going. So I had a series of other roles along the way for a couple of years. A good buddy of mine asked me to help him build out what would be his family office. He was in the process of selling his asset management company, and he sold it to a public company, and then the deal didn't go through. And so all these things were happening, and I just kept going with the podcast. And when that in particular sort of fell away, advertisers started calling, and I said, oh, I guess this is a business. So it was purely accidental to go into the media side. I don't even think I embraced it as the thing I was doing until, 4 years in.
Wow. And was it love at first sight when you started it, or what was it like? Because 10 million podcasts today, listeners, when did you know it was something that worked?
I'll let you know next week.
It's true. You're not doing it for you're not really, but go ahead.
I mean, it's a business now, but when I started it, I never once, I used to joke, this is the next coming of .com. Like, Howard, let me explain my business model to you. I'm going to call up my friends and say, hey, let's have a conversation and record it, and we'll share it with people for free. How's that sound as a business model?
Genius.
It's awesome.
It sounds like you didn't go to Yale or Harvard. You might have gone to ASU.
I didn't have a .com business either. So no, of course it didn't sound like or feel like a business. I would say that, half or more of the time I spend is the exact same way I did for 20 years with just a different outcome. So it used to be I'd have conversations with money managers. I have conversations with my friends who are investing in managers, and you'd make decisions about allocating capital and then do that. And so the conversations at times are a little bit different, but for the most part, it's the same thing. And this was the output was, okay, I'm just going to take the recording, make it sound a little bit better, and share it with people.
Right.
What I didn't appreciate when I started it is that in the institutional investing world, there's a degree of opacity. I mean, you could say there's opaque investments and things like that, but there's a degree of opacity in who these people are and what they do and how do they do it. And it's not just into the public, but it was across each other. So what I meant by that is I would go around and talk to, a bunch of friends that were CIOs, endowments, foundations, pension funds, doesn't make a difference. And no one had ever had that kind of conversation with them. Like, talk to me for an hour about who you are and what you do and how you do it, because they're not commercial. They generally have one client, and there was no forum for them to do it. And so I didn't even realize that at the time.
Got it.
And until I started hearing that from some of the people in the business. And I was like, wow, that's pretty interesting. By the way, that doesn't make it a business, because that just means you're putting out content that has some value to people, which is great. Like, it's fun to do that. And then, you sort of figure it out, like, who's the customer? And so it's a business, right? Who's the customer? I don't know. Is the customer the listener? Yeah, kind of. Is it the guest? I think so. Is it the ad sponsor? Well, for sure, they're paying the bills. And those are three different audiences. It's really tricky to, when you start thinking about it as a business, is there a customer acquisition cost? If there is, what's the return on that? And how do you measure it? And all those kind of things that come up when you start thinking about it as a business, which is fun. It doesn't change the way I go about the show at all.
Let me geek out a bit. This is boring to you, but I'm not a hedge fund guy. But even though I ran a hedge fund for, 15 years poorly, or survived, but never liked it. Do hedge fund managers like what they do in the hedge fund space, or are they miserable fucks like I was?
Yeah, most of the really good ones love it. And the question is, what is it that they love? Some of them love just the competition of winning. And that might mean putting points on the board. It might mean doing better than their peers. There's a, zero-sum game competitive aspect of public markets that some people just love. Some people love the analytical side of it. Some people love the trading side of it. And then some just love money. And those are the ones that flame out.
So if you love money, that was a sign that if they love money, that was a filter for you.
No, they all love money.
Or were you filtering for that when you interviewed people? Like, what was a trait that made them somebody that you, like, for me, when I look back at founders, it's like, oh, obvious. Or somebody that builds $1 billion company. What is it for a hedge fund that worked? Because it seems more fleeting.
Yeah. The persistence is a lot harder than it is in, companies or venture capital or something like that. So over time, it's the passion and the sort of the insight and the ability to see around corners. Because it's unlike a lot of other forms of investing, hedge funds, it's impossible to stay still. It's impossible to stay still with your portfolio construction. It's impossible to stay still with the markets. It's impossible to stay still with a particular style. So you have to kind of have somebody who understands who they are and what they do well, and that they're expressing that, but that also has this kind of, degree of worldly wisdom to be able to pivot when that's appropriate and to communicate why that's consistent with what they were doing before. So it's a really complex puzzle.
Yeah, I would say I've done everything hard. Golf may be the hardest thing to do, not forgetting about the money part of it. I would say as a career, being an entrepreneur, being a venture investor, or being a hedge fund guy or doing stand-up in front of a live audience, the hedge fund is the one thing I would never... If someone said, Howard, you got two choices. End of the world, you're going to have to go on stage and start from scratch or be a hedge fund manager, I would go into comedy first. That's how much I sucked at it or hated it or was misaligned. I think it is the hardest job in the world, just maybe why they're the weirdest, strangest people.
It's also fairly heterogeneous, right? So if you're talking about long, short equity investing, the thing that always struck me is being a good long investor is not the same skill set as being a short investor. So how do you put those together?
Yeah. And what was the strategy that you think that you like to follow? What was it that interested you?
I have always been a moth to the flame for just really, really smart people who are insightful, both about the underlying investments and about, how they go about the craft. So, if you're talking about long, short equity, I preferred fundamentally driven guys who really tried to get research edge, but that also understood the science of portfolio construction.
Mm-hmm. And so who is the person that does that best today? Who is someone where they read or show up on TV or somewhere where you just have to listen?
Well, those are two different questions.
Okay, so answer them both.
So at scale, there's the platform hedge funds. That's a different animal, but they've clearly proven that they know what they're doing. That is a risk management portfolio construction feat to manage leverage at scale. I think if you're looking at an organization or a person or two, just to personify it more, Viking has continued to reproduce strong returns in spite of significant senior level turnover over years, not like every year there's people coming in and out. And so there's a understanding of fundamental analysis and there's a deep understanding of portfolio construction that they nail. And then as an individual who I don't know, by the way, I don't know Dan Loeb, but to watch what he's done over the years from basically coming close to going out of business in '08 to being an event-driven investor, to adding credit, to adding structured credit, to understanding shorting, to being an activist where he started. Like, it's pretty phenomenal to see the success he's had in different market environments, in different disciplines, just generally being very thoughtful and right about what he's doing. But I've never been like inside that organization to really know how it works.
Have you met Dan?
Never.
I met him. It took him 30 seconds to strip me naked, tear me down. God, I got to introduce you to Matt. He's a partner here. Matt was doing data and credit for five plus years for Loeb. I think Dan said on the way out, he says, listen, your bonuses, I'm not suing you. So it takes that type of person.
That's kind. That's very kind.
And also, don't worry, you're not going to be very successful. You're going to work for social leverage. That's a Lindsay character that I passed on. But I had one meeting with him, and it was a funny story because Matt was here at Canute, and we told the story. And I was like, this isn't going to work. And Matt was like, he's going to love you. And we go into this meeting, and it took about 30 seconds to say. He was just mad that he was in the meeting. So it was pretty embarrassing for me.
Yes.
But there is something about even who he hires, because Matt was at WorldQuant before that, and was friends with me and understood he was just social and geeky and fundamental. And, you throw WorldQuant and Dan Loeb on your resume, 5 years each in Bloomberg. I'm like, if we could get a guy like that as social leverage, it's great. So it's just fun knowing that a weird firm like ours can attract that world, which is why I like venture capital. And I think you're even interested in this whole space.
Yeah.
And what do you make of this last year? Like, what's obvious in hindsight?
Well, all of it was obvious in hindsight. What was impossible to know was timing. And I probably wrote stuff about this 2 years ago. I mean, the bubble-like characteristics that, depending on where you sat, if it was in tech, a lot of it looked like what was going on in 2000. Right. Crypto probably even more so. The problem with investing is that you never know when it's going to roll over. And the rational people who say, oh, this is crazy, you probably would have been saying it for 5 years. And if you measured the 6-year period, you're probably better off being in the game. So there's always people crying from the roof saying, hey, I told you so now, and who were certainly calling off warning shots before. But it's very, very rare that somebody kind of calls the warning shot, gets out of the way, and then everything rolls over. It usually goes on for years. And so,
right.
But I think that all of it was knowable, but it was impossible to know when. And that's the challenge.
That is a challenge. I just reposted Bill Gurley from 2016, just talking about what we're seeing today. And he was pretty confident back in 2016. He didn't say this is going to happen, but if you read it today, you're like, oh, I wish I had just read that again in 2021. And then you read it today and go, oh my God, like we all knew it. And it's rather interesting. So which brings me to like your article just recently about fraud. So everybody's beating themselves up. You have a different viewpoint of this for someone in the industry. So walk through how you think about fraud in this industry and allocation, how it happens.
Well, let me go back 1 month,
please,
or so before this stuff really happened, because there was this guy on this podcast, Howard Lindzen, has this show called Panic with Friends, doing an annual review, and said in December, fraud is fraud. And I heard this a long, long time ago from Michael Price, who passed away last year, famous value investor. He got caught in an accounting fraud in the mid-'90s. And I had a chance to sit down with him and ask him what he learned. And he said, abso-fucking-lutely nothing. And I was like, wait, what? Like, I'm 20 something years old. You know, you didn't learn anything? And he said, look, when you come into a fraud, you spend all your time evaluating an opportunity. And somewhere in the back of your head, maybe if you think the person seems like a slime ball, they rub you the wrong way, whatever. There's like something in the back of your head, like 1% of your time, maybe you say, hey, is all the stuff I just saw real? And the problem is that a true fraudster, like someone who's a Ponzi schemer or something that's bad, they spend all of their time staying ahead of you. So, Michael said 99% of your time doing the analysis, 1% of your time trying to figure out if what you saw is real, and they spend 100% of their time making sure they stay a couple steps ahead of you. And so, Madoff was probably the best example of that. And Madoff's a funny one to talk about because, they just came out with this Netflix documentary that's quite good.
I watched it. We talked about it.
Yeah, and my wife saw it, and she didn't really know the story. And she's like, wow, these SEC people blew it and all that. I'm like, well, yeah, for sure. Oh, Markopolis, how could they not listen to him? Well, yeah. But when you were in it at the time, most people had heard of Madoff. And Madoff is a good one because late in the game, by the time the industry had institutionalized to some extent, there were plenty of yellow, if not red flags with Madoff.
Right.
But it doesn't stop people from staying in it who've been in it for a long time. And it doesn't mean that somebody said, oh, there's a red flag, therefore it's a fraud. And I could walk you through all kinds of like yes buts from hedge funds back then. And so it's easy to say. And like, I do think Madoff was knowable for people who dove in, but who cares? Like, why would you dive in? If you don't like it, you move on and spend your time with the funds you do like. And so that's kind of the experience most of you had.
Correct.
And now you have SBF and FTX. And we'll see, right? Like, sure looks bad. He's sure behaving in a strangely transparent way for someone who stole funds and committed fraud. So, we'll see. I really respect what Bill Ackman put out on Twitter saying, look, it's still innocent until proven guilty. And public discourse is he's guilty. There's a lot of signs he's guilty, but let's just assume that it's really bad, right? Like, nobody knew. And
I didn't. I had him on my podcast.
But how could you know if you were an investor in FTX? That's an exchange. Like, that's an unbelievable business. Like, volumes are huge. Like, how are you supposed to know that the guy was like taking the funds to support his, secret hedge fund on the side? And, your guys are more in the crypto world than I am, but they're all 25-year-olds running around without adult supervision.
Yeah.
So, like,
he almost aged out on me. I was like, hey, you're a little old.
Yeah, exactly. Right. So, in retrospect, everybody was smart and everybody knew about it. But I've seen enough of these happen over the years. And those are the highest profile ones. There are lots and lots of lower profile ones that you come across where, firstly, you just never would know. And the second is there is this dynamic that sometimes what becomes a fraud or becomes a problem doesn't start that way. And I think that's probably true of both Madoff and SBF, where they probably had a legitimate business. In Madoff's case, probably lost some money. You start punting on it more. And then all of a sudden you're like, oh shit, what are we going to do? Yeah. Same thing with Alameda. Right. And so, when people go out and say all these people invested in these frauds, like their due diligence sucks. And Sequoia's like, oh my God, we made a mistake. Well, of course they did, but I'm not sure it was a due diligence mistake.
Is it a judgment mistake? Yeah, I'll flip back to this because this is my favorite topic because I had him on my podcast, Canute, and he wasn't, I wouldn't say delightful, but it was fun. Like,
he was great.
I did typical Howard, boxers briefs. We talked about Tether because people were asking me to talk about Tether. What's the point of me talking about Tether? I don't understand it then. I don't understand it now. He gave some gibberish answer. I wish I had never asked him about Tether because, he was probably lying, but I wouldn't have known either way. So, I was asking about dating life. I mean, I don't know. He struggled with the dating life questions more than the Tether questions, but I don't know what the question, if someone is waking up every day to steal from you, you're fucked.
Correct.
I'm so grateful that in many ways I was spared being so close to the flame, right? Like, it feels like I just walked by a building that imploded and only lost a finger because a lot of people are going down, and they're all turning. What's his name? The president of the U.S. Brad Harrison, I forget his name, is now coming out saying, oh. So I think it's not pretty, but when someone is waking up every day living a lie, it's hard to figure it out.
It's really hard. There's another aspect to it, which is, say, process versus outcome, in the sense that when something like this happens, there are a lot of darts thrown at the people who were defrauded. Like, there has to be an assumption that Sequoia has a bad due diligence process because they have, chat room stuff saying, oh my God, I love this guy. But Madoff, nobody lost money.
Right. Because he got it all back, or?
Yeah, they got it all back. Now, they didn't get back what they thought they had because he allegedly was reporting gains, but people got back what they put in. I've seen investments go to zero with no fraud, right? Somebody makes a mistake, a venture capital investment goes to zero all the time with no fraud.
Happens a lot.
And so, fraud is one of the risks. They're the ones that, you feel stupid about, that smack you in the face, that you didn't see coming. But so's a change in a market. So's a change in regulation. So's a, change in customer concentration that goes wrong. It's just one of the risks that you bear. It just feels worse because the person involved was the one strictly culpable. Whereas, if a business fails, it's, there's 25 different factors why it might have failed.
Yeah. So for Michael Price, it was more about portfolio construction. Fraud's just, you spend all your time looking for fraud, you're going to struggle with portfolio construction. You won't invest.
Well, there's a little bit of that, right? There's also, it's a real head scratcher for concentrated portfolios, right? How do you, what a degree of concentration is prudent that you don't have this left tail outcome? And then it goes to what you said about SBF, which is at what point, it's different if you're on a podcast than if you're trying to do due diligence for an investment opportunity. Right. But, at what point in time when you're not comfortable with something that you can't quite put your finger on, but you're not comfortable with it, do you just walk away?
Yeah.
And that's where you get into FOMO, right? By the way, nobody ever really knew what was going on at Renaissance Medallion. It's clearly not a fraud because everybody already got their money back on top of astronomical returns. But there's not that much different in saying, oh, it's opaque. They don't really tell you much. I guess you could look at, thousands and thousands of securities they own. You have no idea how they get there. It's probably true of most quantitative strategies. So once you start peeling that away from just, oh, this was so obvious because they didn't have controls. Come on, go look at all the crypto businesses. Which of them have proper accounting controls in place? So, my guess is less than half.
Yeah. Right.
And there's an element particularly in startups, right? There's an element of fake it till you make it.
It's slippage. I call it all slippage. What hurts is the criminal slippage. As soon as you wire money, there's slippage. As soon as you wire money to the founder, what bank are you using? So it's just degree of slippage, whether you're owning a restaurant and the guys are overpouring or stealing cash. We're in the business of minimizing slippage because things go to zero. So we teach our founders, listen, you got to focus on the North Star. There's going to be slippage. I think what hurts here is that this was criminal slippage. There was just, he had a business. There's no reason theoretically to steal. And now we're just trying to figure out if it was from the start a steal, because, when you look at some of the later acquisitions, that's when it becomes head scratches. Why are you buying, if you're doing so well, why are you buying bad businesses?
Yeah.
So that's when it became weird for me.
Yeah. And, buying at ridiculous valuations of some and things there's head scratching for sure. There's also this question of, in almost any investment opportunity, we're talking about in backing people.
Mm-hmm.
And there are so many examples, you can go all the way back to Michael Milken or David Sokol, who was going to be one of Berkshire Hathaway's heir apparents to run the business, where they're clearly doing so much right, but then something tipped over the edge. And there's questions of whether Milken did anything wrong or it was just Rudy Giuliani gone awry. That's a whole separate thing. But David Sokol, you're an heir apparent to run Berkshire Hathaway and you do insider trading on Lubrizol to make $200,000. It just,
yeah,
that's clearly not about money. but it's about something. Is it about control? Is it about, who knows? And you get into this question of like, how much can you really know about somebody else? And most of the time, people talk about pattern recognition and all that kind of stuff. And that's true. And like, that's why you can still invest, even though these things can happen from time to time. But when you do come across one that is just like, you never could have imagined what Sam would have done this stuff, or some other folks that you come across, it kind of throws you at times. You go, well, how much do I really know about anybody?
Yeah, no, I mean, it's been getting easier for me to just, I wouldn't say laugh about it because there's money involved and people were really hurt. But like your article and this discussion that we had a couple of weeks ago now is just a reminder that when they're out there, these crazies. So the SEC's response to this, does that worry you at all, or is this a nothing burger? Like saying, oh, the VCs, like that just seems, why are they doing this? Knowing what you wrote and what you just told me, how is the SEC getting involved in holding venture capital? Because you're not letting the venture capitalists off the hook. You're saying, come on, people, like this, if the guy wakes up to defraud you, ignore the goofy chat room at Sequoia, like that's their job of taking risk. So with the SEC now sticking their nose and saying venture capital, maybe changing the rules here, what's your initial take on that?
Well, first, does it surprise you that the SEC might be a little bit late?
No, but the easy jokes, we'll give you the easy one because we could spend hours. I don't want to like make it personal, but like it's so frustrating because you're like,
it's not,
your wife even had a comment about Bernie Madoff.
It's not personal. It's just incentives, right? They're government employees paid a government wage with a lot on their plate and a massive agenda. It's just no surprise that they can't get ahead of somebody who's, trying to defraud people. Before you get too upset about changing the rules and people can come after venture capitalists, wait a little bit. There's a fair amount of money and a fair amount of lobbying on the side of capitalism that usually puts some rationality into this before it's all said and done. So I don't really, I don't see a great, reason to have any sort of opinions about what the SEC may or may not do until things really move a lot further down the road.
All right, and so what is it out there today? If you had a choice between investing yourself in startups or with your risk capital or S&P or hedge funds, are you still into like meeting hedge funds and talking to them? Is that something that interests you?
Intellectually, yes. For capital, no. And I haven't really invested, with one exception, in some biotech stuff. I haven't invested in hedge funds since I left Protégé, and the reason is that they're just highly tax inefficient. And even in my years at Protégé, by the time I left, 90+% of the assets were tax-exempt investors. So they're not great vehicles for taxable investors for the most part. There are some strategies that are fine. So I don't have a lot of capital in hedge funds. I invest. There are two types of things I've always liked. I like cash flowy stuff. So whether that's company, I don't invest in a lot of direct businesses because I've just never been, I don't take the time to do proper analysis. I know how competitive it is. But occasionally there's something that looks pretty bulletproof in the public markets that I'll buy, or I like these kind of niche credit strategies. Our buddy Ali Hamed I invest with and his credit strategy.
We're LPs there.
Yeah. And there are a couple like that are really interesting. And some that are just really, really cool in what people are doing. So I like that. And then, I have a few investments in early stage companies, but I am not an experienced venture investor. So I'm a free rider there. Sometimes you come across something that either there's somebody I know who's deeply involved who, it's great. Like I'm invested in the Aura Ring, that company, and a good buddy of mine's on the board, and he showed.
I've heard it's a fraud. But that's rumor.
If it is, my device still seems to work. So maybe the business is, I don't know.
There's just a guy moving dials at Aura headquarters.
And then
with just knobs.
I invested, Michael Batnick told me about this company, Virgil, that is a guy that I knew, Josh Smith, from a business he built, Seides, which is a sort of a software business for allocators. And then he brought it to the RIA world. So he has this great, basically a risk tool that maps to financial statements from Schwab or, Fidelity or whoever it is. And he can help a financial advisor understand, using technology and data very quickly, what somebody owns. and how much it costs them. So they're using it to help financial advisors who are pitching for business look at somebody's assets and say, here's what you own, here's what we could do differently. And it's an amazingly good idea. And it's something that I understand because I, understand the business. And I think somewhere along the way, I'll be able to help them either with exposure or something like that. So every now and then there's a direct company. I love those. I love the lottery ticket type stuff. I'm just not in the ecosystem to know if what people are throwing, like it's a classic Patsy at the poker table. If someone's showing me something, like why are they showing me?
But it depends who's showing me. Now that I know this,
right. You can show me.
It's not like I'm going to come to you with a soda deal and go, Ted's going to make this work for me. But I'm doing a lot of wealth management, so I send stuff to Batnick and Doug. I stack my guests to learn the industry because I believe that wealth management, not sexy, is probably a 50-year growth industry at this point.
Yeah.
While we're worried about Google and Facebook, Schwab snuck up and controls the custodial pipe.
Yeah.
Well, so
absolutely.
We're going to have a huge custodial problem. And then I don't want to work with Schwab. I don't want an 800 number. I don't want some, in a call center working for me. And I know people that work at Schwab. I don't want them near my money. They're overemployed. They're lovely people. They're overpaid and Chuck's golfing. So I'm super bullish on the wealth management industry. Why would I go to Sequoia versus calling you? So I don't think it's about the Patsy. I think people need to understand that investing is really not so much domain expertise, but you got to surround a company with people that know, all the generals in the field, where all the soldiers are and where the puck is going in a certain industry. You can't just take a macro look like you did and say, oh, internet anymore. Internet is everywhere. So I actually think you're underselling yourself. What we believe is social leverage is that the Batnicks of the world. Whether he's a good investor or not, I can't judge. But whether Mike knows because he plays with the products and that. So, with wealth management, I'm not looking to call Andreessen. I know they have the capital to build stuff, but I'm looking at people who are actually using this.
Yeah, that makes sense. So, yeah, I haven't spent a lot of time trying to find a sourcing funnel, right, with people like you, with people like Michael. But that's one way I could go about doing it for sure.
But doing the podcast hasn't created that for you, or is it more just other areas? You're just treating it as simply as a business. This will lead to my conferences. This will lead to just my business I'm building.
I wouldn't say that either. It is the world that I've occupied my whole career, which is mostly manager selection. So the people I interview are chief investment officers of large pools of capital, sometimes some of their favored money managers. But what I don't get into are deals and building individual businesses. It's much more about strategy and investment strategies than it is individual company investments.
So today, Capital Allocators podcast, the person that will like it, who should listen, what should they expect?
What should they expect? They should expect to learn about the people who are deploying huge sums of money, who they are, how they go about doing it, and what are some of the challenges they face.
Yeah, and you've been doing it now 5 years?
Yeah, it's coming up on 6 on the podcast.
Well, congrats. It's awesome.
Thank you.
It's great to finally get you here. I think the lesson of this world is the deeper you go. I have this other thesis now that we don't know what's going forward, but the playbook that just worked for 15 years is not going to work, but for a select few. So I think this is the era, where the deeper you go, the more oil you get, per se, and that oil is, satisfaction. You don't have to please everybody.
Yeah, that makes sense.
Well, it's great. So how do people find you?
Everything's housed under our website, capitalallocators.com. There's a free mailing list, which only goes out, unlike yours. I don't know how you do this daily, but ours goes out once a month. And yeah, everything sort of spawns from there.
All right, buddy. Well, this is great. I got way more to ask, but, I figure people can go to the podcast and really get a flavor for this instead of me. I kind of wanted to just talk about stuff I wanted to talk about. So I appreciate you keeping it agenda free. So, people will come to you and know what to expect. I appreciate your time, my man. Thanks for the discussion about this and some of the coaching. And I look forward to talking to you soon.
My pleasure. Thanks, Howard. Always appreciate it.
Knut!
Yes.
A little different.
Yeah.
So what I would want for people here is like you really want to understand how the sausage is made and how people think at this level and who you're up against. This is why I got out of the business, because people like Ted are in the business. It's not like good or bad. It's not like you can't start a hedge fund, but generally this is why I talk to people that call me out of being a VC or just being a hedge fund. You are competing against the machine, and the machine is there to beat the shit out of you. So it's very hard to have an edge, and people need to know that these podcasts exist, right? Yes. So when I discovered Ted, I was like, thank God I got out of the business when I got out of the business. And here's Ted telling you about hedge funds.
Right.
This guy who did this for a living saying, unless it's like not retirement money or not, tax-free type of money, you're the sucker in the room.
Yeah.
So anyways, there you have it. Thanks, Knut. You are listening to Panic with Friends. I'm Howard Lindson. Handsome, smart, tall, 6'4". How tall am I? How tall are you?
I'm 6'6".
You're 6'6"? Yeah, I'm 6 feet. But I am shrinking. I have lost weight, Knut.
Yeah.
And my pants don't fit. Meaning I still can't get in them because weight's dropping into my waist.
Your weight is literally dropping.
Yeah, I'm a triangle at this point. I'm a triangle with stick legs. So a pair, it's a triangulish pair. So yeah, Panic with Friends. Well, that's generally a show about nothing, but we talk to investors, capital allocators, hedge fund managers, traders, investors, venture capitalists, founders, and we just try and get a peek ahead, what he said, a peek around the corner. And you'd be surprised how you don't have to be that far ahead of everybody else. Anyways, you can find me, search my name on Apple, Spotify, YouTube, the tweets, wherever. Just search my name in that box on the web and go to Spotify or whatever, Google, and click subscribe, Apple, and you will get this podcast every Thursday. Knut and I coming at you, silky voice of Knut. All right, everybody.
Oh, yeah.
Talk to you next week.
Howard Lindson is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast.